Good morning, everybody. Thank you all for joining us at this morning's presentation of the tax and payroll considerations related to COVID-19 and the government's response to the pandemic. My name is Brian Newhouse. I'm a partner with Alegria Company, and joining me for today's presentation is Travis Lorton, a manager in our practice as well.
Good morning.
Thank you, Travis. We sincerely appreciate everybody joining us this morning. These are extremely challenging times. We are facing a very unusual and unknown situation right now. And I know we personally here at Alegria Company have had staff who have been severely impacted by this virus, losing family members, staff who are in self-quarantine and isolation due to concerns about the virus, while at the same time seeing how this is impacting all of our clients and valued friends and the disruptions it's causing to their business, to their livelihoods, the unknown of where this pandemic is going to take us from here. And we just appreciate and think of you all at this time and pray that and wish that your families and you and your employees are staying safe and managing through these difficult times. We hope this presentation today will provide some guidance on the government's response to this situation. It has been rapid. There have been lots of changes coming through. It's been very difficult to keep up with, for all of our clients, for us as well, to see what has come through in just these few short weeks. And the expectation is this doesn't stop here. There will be continued changes, evolutions to what the government responds to this, and we plan to keep you apprised of these changes and abreast of as much information as we possibly can. Just a few housekeeping items for this presentation today. For those of you who are CPAs, this presentation will qualify for CPE credit. We will have a link at the end of this of how you can obtain that CPE credit. There will be a series of 4 polling questions during the presentation. You will need to respond to 3 out of those four polling questions to get credit for the presentation. For those of you who are non-CPAs, please do continue to respond to those polling questions as well, as we want to see what the impact of the coronavirus and everything else has been on your business. So as we get started and into this presentation today, the one thing to be aware of is that this is constantly changing. The government's response to this, they've passed 3 coronavirus related bills at this point. We expect there might be a 4th one coming at some point in the future. That's still being debated, but it's been rapid. And at the same time, it's opened a lot of questions to our clients and for us too, and questions that we don't necessarily have the answers to. The government is passing legislation and at the same time still developing the regulations and how it will impact people. So be aware that while the information we are presenting today is as up to date as possible, there are constant changes coming through, and so we highly encourage you to sign up for our newsletter to stay abreast of those changes, as we'll be pushing those out to clients as we learn about them.
And one thing we want to add on that, as we mentioned, there's lots of questions out there. Please submit your questions throughout the presentation. We'll try to address as many as we can. There is a question and answer spot at the bottom of your toolbar, but as questions come up, please submit those.
Yes, thank you, Travis. We will be responding to those questions during those polling question points, as well as at the end of the presentation today. So the first major change that the government enacted in response to the coronavirus was a change in the tax return due date, which I can tell you personally, and Travis can appreciate this as well, has been necessary, quite honestly. And so many of you, or most of you, are aware that the federal tax deadline was extended from April 15th this year to July 15th. That is not only just the filing deadline, but also the payment deadline, and payment without penalty interest for delaying till July 15th. Not only does this include your federal tax return and the payment that may be due with your 2019 tax return, it also includes the Q1 estimate payment that you would have to make for 2020. So all of those deadlines have been extended by the IRS out to July 15th. Many states are also falling in line with this. Now, not every state has fallen in line, and we're doing a good job of trying to track those. That's constantly changing as well. Just while I was sitting on a webinar on Wednesday, the New Jersey governor had extended legislation to extend their deadline to July 15th as well. Last time I checked, and this could have changed by this morning, Oregon still had a April 30th deadline. And so we'll plan to keep clients abreast of those changes. One piece of information that may be applicable for those of you that had heard there was actual caps on how much of the payment could be extended. They originally said there might be $1 million cap, and above that you'd have to pay. That has been deferred as well. There's no caps on the payments that can be extended out to July 15th. Now, there is a misnomer out there, and be careful. This does not extend any other tax payment deadlines. So if you have payroll taxes that are required to be deposited by April 15th, those deadlines still remain in play, though we will talk a little bit about payroll tax considerations later on. The one change that did come through very recently is that gift tax returns that were due April 15th have been extended automatically to July 15th, though any related estate tax returns have not been extended at this point. And with that, I want to do our first polling questions.
So Brian, while people are answering this polling question, a question's come up. Has the IRA contribution deadline also been extended?
Yes, we have received confirmation from the IRS that the IRA contribution deadline, along with other retirement plan contribution deadlines like SEP IRAs and 401k funding plans, have also been extended to the July 15th deadline. The one unknown in there is if the ability to contribute to a traditional IRA and then convert to a Roth and make that effective, if that is impacted by April 15th or July 15th, and it's still unknown. There has not been clear guidance in that area. But in terms of funding your retirement contributions, we have delays until July 15th. That also includes HSA contributions. Now, Travis, from a client perspective, with this delay to July 15th, do you recommend clients delay getting tax documents in, or with the unknowns related to coronavirus, do you still encourage them to continue the process?
I'd encourage clients to continue the process. I mean, the faster we can receive documents and be able to have discussions over tax planning, the better. That still always gives more time. Using the extension to your benefit to maybe do some better planning or take advantage of cash flow is great, but the faster you can get documents into us or your CPA if you're not with us, the more time there is to address some of these other issues that are going on, especially as we'll see that a lot of these new programs coming out do rely on financial information from 2019 or early 2020.
Thank you, Travis. I second that recommendation. And it looks like the vast majority, about half of our client base has had limited operational impact, and that's not unusual. We are in a very heavily rural agricultural community. Food safety is one of the essential services, and so the fact that we have at least half of our clients still within full operations does not surprise me. But we also do have half of our clients who have had some either fairly significant operational impacts or at least they were shut down to just essential services. The Paycheck Protection Program. This is a very hot topic right now. If you have not heard about this topic, it's become all the rage, and it has been night and day communications from clients in the last couple of days. The Paycheck Protection Program, or the PPP as we'll refer to it, was part of the CARES Act legislation that was just passed last Friday. And this PPP program is essentially the government trying to get as much cash flow back into the economy as quickly as possible. The frustration which we share, which our clients are facing, is this is very new. We're being told, get your applications in right now. Today is the first day that most businesses can apply, but there's not firm guidance on what that means. And many banks are not at the place where they can actually accept applications. But we're being told get them in right now, because if you don't, the money may not be available. I share the frustrations, I share the concerns. All I can say right now is do be aware of these. Work through the application process. We'll have some links at later on in the slide deck about that application process, and be in communication with your banker to understand how best you can get into this program. Now, what is the PPP program in general? In general, the PPP is going to be a loan program facilitated by local lenders, but 100% backed by the government. That's going to allow small businesses and other small organizations, including nonprofits, with 500 or less employees to apply for this loan. Now, you must have been in business as of February 15th this year, so you cannot go set up new enterprises and try to get into this. This will include self-employed individuals. Unfortunately, their application process does not start until next week. So if you run a business as a sole proprietorship or a Schedule F farm where you don't have any other payroll, you will have to be delayed in your application. But if you do have payroll, those things don't apply. You can get into the process now. The 500 employee limit is actually applicable for most, but not everyone. Certain businesses have been given a waiver of this 500 employee limit, including franchisees and restaurant owners, where they apply it at a 500 per location level. These loan amounts are going to be calculated based on what is your average eligible monthly payroll amount, and we'll have some links to how some calculators to do this later on. And you take that eligible monthly payroll amount, multiply it by 2.5% or 2.5 times, and you either get that or there's a cap of $10 million. Now, payroll includes all compensation you're paying, except for wages over $100,000. So if you have somebody who earns $110,000, you get to include their first $100,000 wages, not their last $10,000. It includes also state and local taxes paid on employee compensation. Now, for those who are self-employed with no employees, you will also be able to use your annualized self-employment earnings for figuring this out, but once again, capped at that $100,000 level. Now, why is this program so important, or why is it, there's such a high demand for it? The biggest aspect of it is this, while it starts out as loan, can turn into loan forgiveness. So what that means is once you receive this loan, the principal, not any interest that is incurred, but the principal of the loan may be forgiven on a loan by loan basis in the amount equal to you having spent on certain costs during the 8-week period that follows after the loan is made. And what those specific costs are, it's your payroll, it's your interest paid on mortgage, rent, or leases, and utilities that were in place prior to that cutoff deadline of February 15th. So once again, you can't go set up a new lease agreement and try to get paid out underneath this. These allowable costs are going to be reduced, or the loan forgiveness related to the use of those funds for those allowable costs will be reduced for borrowers if you bring your staff full-time headcount down, or if you decrease your salary and wage expense by 25% during that payment period when they compare it back to your last full quarter earnings. So, this is an incentive to bring staff back onto payroll and get this money paid out to those staff. And so much so that even though this was not included in the statutes, they have already provided the guidance that those non-payroll costs, the interest, the rent payments, and the utility expenses will not be more than 25% of the balances that are forgiven. So the focus here from the government's perspective is let's get money out to businesses to keep their employees on the payroll during this time period. And by doing so, during that 8-week period, you may have that loan forgiven. Now, the Payment Protection Program does require a couple of good faith certifications that are very nebulous or unclear. The first one is that current uncertainty makes loans necessary to support ongoing operations. And what does that mean? I can tell you this has been a real discussion point. I think most of us would say we are in very uncertain times, and my business, I don't know what's going to happen in the near future. So there's support for businesses who say, hey, we're still in operations, but we don't know what it's going to look like a month from now, and the ability to go in and apply for these loans. You're also making a certification you're going to use these funds to retain your workers and finance payroll and those other critical costs that they talk about. And that's the intent of the program, focus on those critical costs. And there'll be a few other documents that verify that they're primarily looking to, do you have the payroll records to support that the fact that you have employees and we're paying you this money or providing this money for you to support payroll costs going forward. Now, what are the loan terms? Well, the loan terms, all these loans are going to be facilitated by commercial banks, not the SBA. So most all banks should be eligible to participate, though they may not choose to participate. They're being encouraged to. But what we're seeing in reality in the last 2 days is that not all banks have got the processes lined up for facilitating these loans. So we are still unknown exactly how all the banks are going to go through this process. So, our encouragement at this time is continue to talk to your bankers about these SBA loans. Some banks have come out to say we're only going to work with clients who had existing depository relationships with us. Other banks are saying, nope, we're going to take on new clients. Maybe you have to open an account with us. So I'd encourage you, if you call your bank and they're not participating, then do look to other banks as well. And it's going to be a lot of the big banks that are structured well to do this from the beginning. Now, an important piece of this is there's no personal guarantee or collateral that's required against these loans. So we do not have to put anything in the business at risk related to this. And I asterisk that because I say, as long as you use those funds for what you said they were intended for. If you choose to use these funds for something other than that, they actually have expressly put in the application that you could be subject to criminal penalties. So do not go get one of these loans and then go play the stock market with it. My guess is they will come after you for that. The payments on these loans, if it are not forgiven and choose to be a loan instead, they're deferred for 6 months, but during that 6-month period of time, interest will accrue. And any loan amount that's forgiven, and this is key, any loan amount that is forgiven will not be taxable income to you. Now, one thing to be aware of is these benefits are somewhat mutually exclusive. We're going to talk a little bit later on about credits that are related to payroll. And these payroll credits, if you take loan forgiveness, you may not be eligible for all the payroll check credits. So there are some trade-offs on, do we take these loans? Do we do the payroll credits? Now, the information I'm getting is that for the most part, this loan forgiveness is probably the #1 resource and provides the best overall benefit. But be aware, if you don't get into the loan program, or you don't qualify for it, there are going to be some other benefits that are available. Now, the final piece of the puzzle related to the loan programs, moving past the PPP, is also these economic injury disaster loans. And this is a loan program that's existed prior to coronavirus. It's been related to, if we had a federally declared disaster, if we had a hurricane, if we had tornadoes in parts of the country, these SBA loans have previously been available. So they already have a process through the SBA to sign up for these. These disaster assistance loans, though, now are expanded to essentially everybody in the US or any territory, because they're saying we're all under a federally declared disaster. And so these can provide up to $2 million of working capital loans where you have economic injury as a result of COVID-19. Now, the really key piece here is if you get the application in, there is a potential of a loan advance up to $10,000 that can be received within 3 days of a successful loan application. And that loan advance doesn't necessarily need to be repaid, even if your final loan is denied. So we're encouraging clients, get in and go ahead and sign up for one of these EIDLs if you're facing, short-term cash flow issues related to COVID-19. Now, just choosing to get an EIDL loan does not affect your eligibility for applying for a PPP loan. The two are going to work together. Once going back to that double dipping of benefits, they don't want you to use the loan proceeds for covering the same expenses. So if you get a PPP loan, you're using that for payroll. If you get an EIDL loan, you're using that for some of the other expenses of the business. And if you choose to apply for both, and I encourage you, when you start talking to the banker about the PPP loan and you've already received an EIDL advance, make sure you work with them, because there's going to be the chance to roll that $10,000 into that PPP loan to apply for the forgiveness and the lower interest rate. And these EIDL loans are directly through the SBA. Now, before we get into the next section, we'll do our second polling question. So does your business have planned to apply for a PPP loan?
And why that's there, we're receiving a lot of good questions around the PPP loans. Try to summarize a few that maybe you can jump on quickly. Number one, what is the loan date as far as when you've applied for that loan? When does your 8 weeks start? Is it when the declaration was made that you could get the loans, or is it when you actually receive the loan?
So our understanding at this point, and once again, this goes back to the fact that, the guidance is not, clear and all built right now, is that these loans will start the day you're actually approved for the loan and funded for the loan. So even if you choose to apply today and the application takes a 3-week process before you're approved, it's not today's date that sets that 8-week period. It's when you actually receive the funding for the loan. Now,
go ahead.
For an example of how these programs are changing constantly, just yesterday, the guidance from, the PPP program was that the loans were going to be a 0.5 interest percent. Last night, they updated that to 1% interest. So it's a constantly evolving process right now.
So you also mentioned that, if you've had to lay people off, you have a time to bring them back. Do you have to bring back all the employees, or what happens if you don't bring them all back?
So the way the program is structured, the guidance from the program is structured right now is that you're going to have a forgiveness period to be able to bring back 2 full-time, headcount. And so while during that 8-week recovery period to be eligible for loan forgiveness, you need to be using those monies for payroll. The guidance right now is that if you bring back your headcount up to what it was prior to this incident by 6/30, then you could be eligible for loan forgiveness still. I'm going to go ahead and end the polling question. And as expected, the vast majority of people are applying for the PPP loans, or they're just not sure because this is a brand new program. There are some businesses that are not choosing to apply, and I completely understand that as well. So another aspect of the government's response to the coronavirus is the Families First Coronavirus Response Act. And this was actually passed about a week prior to the CARES Act, which is where the PPP program came from. So the FFCRA program, and sorry for all the acronyms, was the second major government bill related to coronavirus. The first one was one that was an emergency funding bill primarily for hospitals and the healthcare system. The FFCR was the second bill. The CARES Act was the third bill. And like I said, we do expect a fourth bill to be coming. So the Family First Coronavirus Response Act focuses on providing emergency paid sick leave and emergency paid medical leave. And it's geared towards employers with 500 employees or less, or all government entities. And the reason they selected that threshold is employers in excess of 500 have historically had paid sick leave programs. And so they wanted to focus on that sector of the business or the economy that didn't necessarily have a paid sick leave program in place. So there are 2 sick leave programs that came in under the FFCR. There's an emergency paid sick leave that's available for 2 weeks, and then emergency family medical leave that's available for 12 weeks, but the first 2 are unpaid, the next 10 are paid. And really the 2 programs are supposed to go hand in hand. You take the paid sick leave first to cover your first 2 weeks, you take the medical leave, family medical leave after that to cover the medical leave side of it. Now, be aware, this program takes precedence over existing paid sick leave policies, and it's meant to be additive. So for example, those of us here in Washington State who have state mandated paid sick leave, this is on top of your state mandated paid sick leave and takes precedence over that sick leave. Now, the legislation does not require this to extend past December 31st, 2020. So the program starts as of 2 days ago, April 1st, and only runs through the very end of this calendar year. And there's no requirement that you're going to have to carry over after that. You don't have to pay the sick leave out if you terminate your employment relationship with the employee, but you do need to provide it during that period. And there are going to be some nice tax credits for when you do provide this paid sick leave. Now, what are the qualifying events that allow you to pay or allow an employee to go on this paid sick leave? You essentially put them into two buckets. The first three are when, if I as an employee have either come down with COVID-19, am experiencing symptoms related to it, or have my healthcare professional telling me I need to go into quarantine and I can't work, those are qualifying events that say, you can go on this paid sick leave. The second three are qualifying events that relate to the care of others. And so the first one is if there's a family member you need to care for that is under quarantine orders, then you can take the paid sick leave for them. In addition, we all have, or many of us have probably been impacted by this. I know my wife is currently at home with our 3 children, teaching them with information that's coming from the school. If you have to take time off of work to be with the children because there's no school or childcare available, then you can also take this paid sick leave related to COVID-19. On the paid medical leave, it's really just that last one, which is qualifying for the paid medical leave, is when you have to take time off because of childcare or school closure issues. Now, why is it important to differentiate between those things? It's going to tie into the amounts that get paid under those programs. Now, the first thing and a very key question that's come up is that business closures that are caused by either our current stay-at-home orders that have been extended through May 5th or May 4th, I forget the exact date, or if you've had to close business due to other issues, those are not qualifying events for this paid sick leave. It was just those items I talked about previously. So just because the business is closed and we're supposed to go into a stay-at-home order does not mean you can take this paid sick leave. Instead, if those employees have been laid off, and they should go look to unemployment benefits, which Travis will be talking about in a little bit. Now, if you do have employees who qualify for this paid sick leave, what it is 80 hours for full-time employees, or what a typical payment is for your part-time employees during a 2-week period is the baseline for that paid sick leave. And those employees are allowed their full pay during that 2-week sick leave period, subject to a maximum amount of $511 per day. So either whatever they would normally make, or if that goes above $511, you're capped at that $511. Now, that only relates to the paid sick leave when employees themselves are sick or isolate, quarantine due to the coronavirus. If they have to take time off of work either to treat a family member or because of school closure, childcare issues, then those events, employees only get 2/3 of their regular pay, capped at $200 per day. And that applies for the paid sick leave in those qualifying events, or the eventual paid medical leave that they may take related to it. Now, the final piece in this is that this sick leave policy is actually going to be a tax credit available to self-employed individuals who have to go on some sort of sick leave as well. And so this tax credit is going to fall under that, $200 per day, or 2/3 of their average daily income, which, even if it's, regardless of what caused the paid sick leave for a self-employed person. And what we don't know yet, though they've given us a hint, is to say there's going to be pretty extreme documentation requirements for the self-employed person to prove that. What those are, we don't know yet, but they have already issued us the warning that there is going to be that. Now, there is an exemption. So if a small business has 50 or fewer employees, they can exempt out of this if the leave is requested related to the school closure or childcare provider unavailability. And if an officer of the business is willing to certify at least one of the following events on the screen. So you either have to say, this is essentially we're not going to be able to support this because our revenues aren't going to be there with these missing people, or our business is so impacted that we're in the negative right now. If the specialized knowledge or skill set of that person is so great to our business that we can't afford to lose them, or if we can't find anybody to replace that. So there are some exemptions, but they're very, very strict, and you have to apply for the DOL to take one of these exemptions. And with that, I will turn it over to Travis to talk about unemployment.
Thank you, Brian. Brian has gone into detail of programs meant to keep employees employed. But we all know the reality is there's a lot of businesses out there that just cannot right now keep their employees employed. And so the CARES Act has expanded unemployment benefits to cover those instances, especially beyond what traditionally has been unemployment, to cover individuals that because of a COVID-19 issue have either had to quit work or have been unable to work if they were not already under an unemployment coverage. It's expanded to cover self-employed individuals. It's expanded to cover independent contractors. And also they've expanded to cover employees that have a limited work history. So those are employees that don't have the 680 hours of prior work experience to qualify for unemployment benefits. Now, the state's not 100% sure what that means, so we're still waiting on additional guidance for what does it mean for someone with a limited work history, but the framework is being built for that. So this will be a much more comprehensive coverage for your employees if you do have to lay them off or you do have to reduce their hours. So what the federal coverage did under the CARES Act is it went through and extended 13 weeks on top of any state benefits that were already there. Now, Washington is a 26-week unemployment coverage state, so it added an additional 13 weeks to the end of that. So you have up to 39 weeks if you're on unemployment in Washington through the end of the year. So if you were to start unemployment now, that 39 weeks would probably cover the rest of the year, and you'd have close to 9 months of benefits available. And that's available to anybody that goes on to unemployment after today and anybody that was already on unemployment coming into today. So if you were already, several weeks into your unemployment, that 13 weeks will be added to the calendar or to the end of the unemployment that you would have had. But that does end at 12/31/2020. The government will not cover the extra 13 weeks. If your 13 weeks goes into December, it'll cut off at the end of the year right now. And the other piece of it was an additional financial piece, and many probably have heard the additional $600 added to your state benefits. And so what that is the state will still have its normal calculation of what your benefits are, and the federal government is going to take that amount, whether you're part-time, full-time, if you qualify for the unemployment, we'll add $600 weekly benefit to that amount. Now that benefit does not go the entire year, it's a limited time. So that's from March 29th through July 31st. So those weeks, if you're unemployed, you will get the extra $600. Now, if you're unemployed, let's say back on March 1st, you will get this extra $600, but it won't start till effective March 29th. If you are unemployed starting sometime in April, the $600 will kick in at the date you were unemployed, so you won't get back paid to the 29th. But the $600 is an extra benefit from the federal government. The state has not yet determined if that'll come in the same check that the state is now giving you, or if there'll be an additional check. They're still trying to get their software updated and the requirements all met. So there will be probably some hiccups with that. And another thing to look at is, the COVID-19 issues are not sickness-based, they are economic-based. So if it is a sickness-related issue, that's where the prior programs that Brian talked about come into play, the paid leave and those type of programs. If it is an economic reason, as far as business interruption, those type of things, that's where the unemployment part comes in. So go ahead and go to the next slide there, please. So there's a couple ways to qualify for employees. Now, one sort of a newer one is, what if I didn't get laid off, but the business has suffered, so we all have our hours cut back. Employees who are partial employment now, but were full-time before, can still receive benefits. So they will have current weekly earnings that they'll have to turn in to benefit calculation to determine what benefits they will receive. But if they were a full-time employee whose hours had been reduced and they work at least 40% of their full-time rate, which in this case 40% of 40 hours would be at least 16 hours a week, they would be allowed unemployment benefits potentially under this program. They have to know that they will most likely return to full-time within 4 months, so they'll have to work with their employer on that piece. But if they fall under this designation, they get at least the 16 hours a week. They can receive partial benefits to help with some of that pay decrease. and they don't have to go out and search for other work, which is many times one of the requirements of unemployment. If they do fall under the 16 hours, they may be required to go look for other work, but as of right now, Employment Security has suspended that piece. So, but they have put a notice saying, we're not asking people to look for other work at this moment, but could in the future. So just something to remember there. Go ahead, next slide, please. Sorry, Brian, just to interrupt you there. You're muted.
Travis, I was going to say we're getting a lot of questions on the unemployment. Some of those are going to be covered here very shortly on the slides, and then whatever questions we don't get, we'll address at the end or next polling question.
Yes, thank you. If you can move that forward to the next slide there. So, you know, that's the employee side. One of the downsides to unemployment, of course, as an employer is when your employees go on unemployment, you are charged a benefit charge that you see because you're using the state system. And so that usually increases your unemployment rate, which increases your tax you're paying in for the state unemployment. Now, because it's a special situation, there is relief available for employees. So if your temporary shutdown is because of a COVID-19 contamination or quarantine, so an event happened to you, to your workplace, you can seek relief through a written request to the Employment Security Department. So they have not released what that looks like. I assume there may be some sort of form or a standard letter that you can write, but if you had a designation where I have to send people home because there is the health risk here, you should be able to seek relief from that temporary shutdown, and it should not hurt your benefit rating. If you have a temporary layoff that's not directly related to COVID-19, the state government has set aside $25 million to help pay down a portion of those benefits charges. We don't know how much that's going to be per employer, but you have till September 30th to apply for this pool. And so what they're saying is, yes, that layoff, because it wasn't directly related to a health issue that caused you to close at your site, but is related to some sort of slowdown, not directly linked to COVID-19, but it could be indirectly, business slowdown, those type of things. Yes, you will be hit with an increase, but there is a pool to help deal with that increase and maybe pay down some of those charges. So we'll know more as we go forward in that. That's one that's open a little bit longer, so my guess is guidance on that will come later than some of these other things we're waiting on. But it is something to think about. You know, they're really pushing, if you can keep employees on the payroll, absolutely, here's these programs to do it. But if you can't, trying to provide some sort of safety net for the employers, but it may be limited. So what else can you do? If you put your employees into a standby status, that's one of the things that qualifies you for this assistance against your benefit rating. So what is a standby status? Well, standby status is I have full-time or part-time employees that have been laid off or had their hours reduced. So it doesn't matter that they're not full-time employees all the time. I can take out of my entire employee pool that I've had to do something because of a change in business. The standby employees are available to me as the employer to work. And if I have work and offer it to them, the employees in this standby status need to accept that work, as long as it doesn't break any issues that they have with isolation or quarantine requirements. So it truly is a standby where they are waiting to come and work. And so anything I offer, if they are in standby status, they need to accept it if it's available for them to be able to accept. Now, first 12 weeks under this emergency proclamation that an employee can be standby related or standby status is at the election of the employer or request of the employee. And the Employment Security site has ways to apply for both those, as the employer, as the employee. And the employer can also apply for a group of employees as well. It does not have to be employee by employee. So there are ways to do this. And the first block of it is 12 weeks that's set aside for this standby designation. So you do plan on being able to bring these employees back to work. You are trying to keep the business open. You're going to offer them work as it comes. That will be there. Now, the nice thing about standby employment for the employee is because they have an employer that they're tied to, they aren't having to go out and meet the requirements to look for other employment elsewhere. So they can focus on, it does give them the ability to focus on things at home. They're not searching for another job. They do have an opportunity to come back to their job as long as the business is going to stay open or planning on staying open. Now, it does say if your business plans on closing, you do need to notify the department so that they can take the standby status away, and then it goes back to normal unemployment status. And then if 12 weeks is not available, or 12 weeks is not enough to cover, the employer can ask for an extension, and then that's at the department's discretion and case-by-case basis, but the employee is not allowed to ask for that extension. It needs to come from the employer's side. So a couple other things on the employers. Employees cannot receive sick pay and unemployment benefits. It gets back to the first slide of the unemployment changes. This is for economic reasons. So if you have an employee that has to leave work because of sickness related, they need to use the sick programs. That's whether that's paid family medical leave, the 2 new government programs, sick leave bank, those type of things. Those are for sick purposes. So if they are receiving unemployment benefits, they cannot receive the sick leave benefits as well, and vice versa. So they don't work together. They're for 2 different reasons. And now employers in this plan, if you're on unemployment and you want to keep your employees close to what they would have made, you can supplement their earnings, but there is a downside to that. Anything that they make as earnings in the benefit week, they have to turn in and it counts against their benefits. So it's somewhat difficult to get their earnings all the way back up to that amount without paying more than they would have, because they're going to reduce some of their benefit by the amount they receive. But it is available to supplement their earnings. So if you have the ability to do that and you want to do that, it's not prohibitive like the paid family medical leave is, where you can't pay wages or certain things on the paid family medical leave through the state. So that is something to look into, where you can continue to support your employees if you are able to and want to in that. The expanded coverage for self-employed people, independent contractors, the state is not quite ready for that yet. They do expect by mid-April, which is only a couple weeks away, to have a program ready. So if you are wondering about that, do check the Employment Security Department's webpage. They have a link for COVID-19 information right at the top of the page. And they also have a sign up for an email that when there's changes, they'll email you on those changes, but that should be coming mid-April. And nonprofits are also available for this expanded unemployment, but there is a caveat. If church employees who are employed for their religious purposes, such as priests and ministers, they are not eligible. So you can cover church staff, you can cover staff at a nonprofit, but not religious employees. So in that case, they may be available for a disaster loan or other federal aid, but not through the federal unemployment expansion.
Great, thank you, Travis. And with that, I'm going to launch our 3rd polling question. So what impact has COVID-19 had on the employees of your business? Now, Travis, while we're going through those things, we have a lot of questions, and I do apologize. We did not let everybody know at the front of this presentation that yes, we will be emailing not only the slide decks from this presentation, but also a recording of the presentation out after the seminar today. So don't worry, you will be able to listen to this again and see the presentation materials as well. Those will all be coming out. We've got quite a few questions, Travis, related to, going back to the PPP program and some of the thoughts around keeping people employed. What happens if my business is in, kind of lockdown mode? I'm not able to reopen even if I get this loan. What is our response on this in terms of being able to forgive that?
I mean, right now with what we're looking at with the PPP, it's actual money spent on payroll. So if you are able to pay, let's say through this unemployment supplement employee wages, that will help towards that count. Brian, correct me if I'm wrong here, but I don't think there is a catch-all if you cannot come back within, let's say by the June 30th deadline, that you can then get an extension on that June 30th amount.
Correct. Right now, our read is the intent of the program is even if your business is shut down, if you go through one of these loans, the intent is to bring your employees back on staff. So effectively, you may end up paying them for not working during this time period. And that's the intent of the program, is to keep funneling money out to the employees. On that same vein of thought, there's also questions that have been risen about, when, if we shut down 4 weeks ago, when are some of these programs retroactive to? Well, on the emergency paid sick leave and paid medical leave, the program was only effective as of April 1st. And that only includes time worked after April 1st. So if you had a payroll that, say, occurred today, but it was for time worked prior to April 1st, that does not count under these paid sick leave programs. With that, I'm going to end the polling question and share the results. We have a fairly significant number of people who've been able to keep their employees working, whether it's on-site or remote. We do have a fairly number, as expected, people who've been laid off as well, unfortunately. Now, some of the additional items that are in the CARES Act that relate to the employee side of things and the retention. Remember, most of the CARES Act is focused on keeping money into the economy. And a big way to keep money in the economy is to continue to have people employed, even if their workplace has been constrained by being able to do so. And so a lot of these programs and tax credits and the PPP program, for example, are focused on keep people employed. To that same vein of thought, there's going to be this employee retention credit that came from the CARES Act. And this may qualify for those folks who said, hey, we had to shut down 3 weeks ago, but we've kept staff employed. Well, that's where this qualified employee retention credit will come into play. And what this is from actually dated back till March 12th, all the way through the end of the year. If we have businesses who are impacted by COVID-19, and that's either shut down, operations reduced, or they have a significant, so say they're still in business, but they have a significant reduction in their revenue, which they're saying is 50% or more when you look at 2019 to the same period of 2020, but you continue to pay your employee wages, you will get a tax credit to cover those wages. And that tax credit is going to be up to 50% of the first $10,000 paid to each employee. So essentially $5,000 as long as you meet that $10,000 cap. Now, for businesses that employ less than 100 people, this retention credit is going to be all qualified wage. It doesn't matter, if your employees are working or not working, those wages still qualify. For businesses over 100 employees, it's only going to relate to the wages paid to those employees who were unable to work during these impacted closures. And one key thing to note is if you have employees who you qualify for the work opportunity tax credit for, this employee retention credit is not going to be applicable. So it goes back to the whole thought process throughout the legislation, which is no double dipping of benefits. If you get a benefit over here, you're not going to get the benefit over here. So that's the employee retention credit that's part of the CARES Act. In addition, there is going to be this payroll tax deferral. And people may have heard about this already. It is very unusual to me that they even put it in the act, but it's there. And so what the CARES Act is going to allow us to do is, so employers are going to be able to defer the employer share of Social Security tax. So that 6.2% tax you pay on your wages, you can defer that tax for the period of time covering work from March 27th through the end of this year. So that side of payroll taxes does not have to be paid into a deposit. However, that's just purely a deferral. These taxes will still be owed. 50% of them are going to be owed by December 31st, 2021, 50% by December 31st of 2022. Now, taking part of this, if you get into the PPP program and loan forgiveness, you're not going to be eligible for this payroll tax deferral. If you are getting tax credits related to, the employer retention credit or some of the family first care, you don't get to take this deferral mechanism. So be careful. Make sure you understand when we're eligible for this or not. My general overall feeling, and this is a personal item, but I'm going to sincerely express it to all of you, is that unless this is going to be your business is going to shut down because you have to make these payroll tax payments, I strongly am advising against taking this deferral mechanism. The IRS prior to the CARES Act, and especially with the new commissioner who started a year and a half ago, was very clear. They were starting to come after people who were behind in payroll taxes, including some fairly significant criminal penalties and cases against folks. So if you choose to defer these and cannot pay them when they become due, I do not think they're going to be very forgiving on these. So I would say if you elect to do this, be very careful and make sure you do truly have the money set aside to make these payroll tax payments, come 23 months or 33 months from now when they're going to be due. Now, the one benefit that maybe we think about is for self-employed individuals. You are allowed to delay 1/2 of your SE tax related to that Social Security tax. They're not going to come after you as quickly for having failed to pay your self-employment tax on your own self versus trust funds that you withheld from employee pay. So self-employed individuals may build that into, and I'd be a little bit more comfortable with that. Know this program is available. I'm not at this point encouraging clients to take advantage of it. I think there's so many other things that we should really be focused on taking advantage of. Now, finally, all of these great payroll tax credits and retains and things like that, how do we actually put them into practice? Well, the CARES Act specifically says we want businesses to keep this cash flow now. The important thing is to get the cash flow into the economy now. And so the CARES Act actually says, hey, these credits are both refundable and they can be accessed in advance. So in that instance, what the IRS is telling us, the guidance that's coming out to tell us to do is to say, take advantage of these payroll tax credits by, instead of paying in the money to your deposit, for those things that are going to qualify for the credits, for those things you're going to get the money back on, just don't pay in the deposit now. We're not going to charge you a penalty if you fail to deposit incorrectly when it comes time to true everything up, but do keep the money back for yourself that you would be getting back in these credits today. And if you choose not to do that, then there's also going to be forms, a reconciliation of these payroll tax credits available on the 941 forms, or hopefully the 943 forms for our farm clients, where you'll be able to reconcile back and get these credits back eventually on those forms. Now, we haven't seen the drafts of those forms yet, but the IRS says they're coming. And they did release this draft form 7200, which says, hey, if we need to get an advance of the credits we're expecting to take, which I'm not sure exactly how we're going to calculate that out right now, but guidance is coming, then you can submit this 7200 form to get an advance of those credits that you're planning to take later on. And with that, we're going to ramp into the last part of our section, which is to talk about the CARES Act made some significant tax law updates for businesses. Now, what these primarily geared towards was the Tax Cuts and Jobs Act that was enacted just a year and a half ago now. And so the Tax Cut and Jobs Act was a very, very wide-reaching tax reform act. Many of us are still scarred by it at this point in time. That just came through, effective for 2018. And most of it was very taxpayer friendly, but there were some provisions in the act that were not business friendly. And so as part of the CARES Act, Congress decided we're either going to completely roll back, or at least for a small period of time, 2018, 2019, 2020, delay some of those not friendly taxpayer positions in the Tax Cuts and Jobs Act. And so those things that were causing additional taxes due, they're essentially deferring to 2021 at this point in time. The overall biggest one, and this is really a technical correction, relates to the qualified improvement property. And so the CARES Act finally fixed what was a big mistake in the Tax Cut and Jobs Act. Everybody admitted it was a mistake they didn't mean to cause, and now they've corrected it. And that is, things that are qualified improvement property. This is for our clients who have restaurants. This is a very big deal. It's the interior improvements made to a building. Those historically have been 15-year property. And all of a sudden, under the Tax Cut and Jobs Act, they got extended out to 39.5-year property, which meant they weren't eligible for 100% bonus depreciation in year one. And that caused real issues. Now what they're doing is they're saying, hey, we are fixing that. We're going to make these 15-year property. We're going to make them eligible for bonus depreciation. And we're passing this all the way back to correct as of the beginning of 2018. And so what they're doing is they're giving us a chance to go back and start to recover tax dollars we may have paid last year, or we may have been slated to pay for 2019, and get that cash flow back into the economy. So they've made the technical correction of that qualified improvement property, and it's something we'll have to assess for the clients this was applicable to. In addition, another big change on the Tax Cut and Job Act was to say, hey, we're going to put some restrictions around net operating losses. We're only going to allow you to use up to 80% of a net operating loss, and you can no longer carry these back and get refunds of taxes you paid in prior years. Well, for now, those are suspended until 2021. So those rules that came in place are suspended to 2021. And if we generated an NOL last year, or if we have one for 2019, or if we're expecting one in 2020 because of the impact of COVID on our business, we're going to be able to take those net operating losses and roll them back up to 5 years and recover the money, that we paid in taxes 5 years ago, or 4 years ago, or 3 years ago, off of the net operating losses we generated. Now, this is huge. I did sit on a webcast this morning where the semantics of how this is going to happen, it's a little unsure because of how long it takes the IRS to process amended returns. So we expect there's more to come on this. And then finally, two of the other business unfriendly that weren't as critical for a lot of clients, so there were a few people impacted, was the ability to deduct all your business losses. So there used to be this excess business loss. If you had too much of business loss, you couldn't offset it against other income you had. Those provisions are gone for 2018, 2019, and 2020. They'll come back in 2021. And the same thing for business interest expense limits, for very high revenue taxpayers. Not a lot of, this didn't apply to a lot of our clients, but there was this limit on, can we deduct all our business interest expense? And it was a limit set at 30% of this taxable income. Well, that's been, raised up for the next 2 years to 50% instead. With that, we're going to do our final polling question and move on to the very last part of our presentation. So talking about payroll, what is the plan to keep staff employed even without paid work? Given all these tax credits, the PPP program, where is everybody thinking as they move through this?
So again, Brian, we are receiving a lot of questions, especially about the PPP loan. Just for clarification, when you're calculating your monthly payroll average for your base loan, what kind of payroll things go in there? Do bonuses and other one-time pay amounts go in that calculation?
In terms of calculating what is the average payroll cost for the PPP loan, that's a little nebulous. They said all compensation, so I would take that as meaning bonuses as well. Now, there are going to be some resources on our very last slide for calculators to help clients walk through the thought process in more detail around how to calculate that PPP loan amount. With that, I'm going to end the polling and share the results. And it looks like we're about 50-50, and that doesn't surprise me. It's an unknown world right now. We don't know where to go, and we're kind of all living day to day on many of these things. So, and finally, there are some other very significant changes to be aware of. These are primarily more on the individual tax side, which was not the purpose of today's webinar. So we're just highlighting a few of the major ones real quick. The advanced rebate credits, that's the stimulus check money that's going out. There is going to be the suspension of required minimum distributions related to 2020. That is not only for those of us, those clients who are retired, but also those who may have had an inherited IRA. Those RMD requirements are suspended for a year. There's going to be some favorable 401k distribution and loan provisions that you can take advantage of. Though I always say that's a source of last resort, in my opinion. And then finally, they're significantly increasing charitable contribution limits and created this new above the line deduction for charitable gifts. Now, this isn't a full, there's many other things available under the CARES Act, but from today's presentation and some of the major items, especially employee retention credits, the fact that they want to keep money flowing back into employee checks to keep the economy rolling, that was the focus of items we were planning to cover for today. Now, related to the resources. And like I said, we will be sending out the slide deck after today's presentation. Here are some of the key resources that we've been working off of as we start going through this. I encourage you guys all to look at these. There's more information about the PPP program, the EIDL loan program, those calculators for the PPP program I talked about, Washington State unemployment, IRS information about the response and the CARES Act and everything else. And I highly, highly encourage you guys to sign up for the newsletter, because that is going to be our primary mechanism for rolling out additional communication as things happen. They're happening on a daily basis, and so we will be communicating that out to you as quickly as possible. For those clients, we had lots of questions we are unfortunately going to be able to answer in the short hour that we had together. We will be saving these questions. I encourage you all, reach out to any of the partners, any of the staff here at Alegria and Company. We want to be here to support you. We know this is an extremely challenging time, and we do thank you for the time you spent with us today. And we hope that you all stay safe, take care of yourselves, and we hope to see you all very shortly on the flip side, and when we can all go out and celebrate once again, because this process has been over. So Travis, anything to add on your end before we end today?
No, if you do have, we'll send out our contact information when we make this available as well. If you do have additional questions, please do reach out via email. We'll also compile these questions, like Brian said, and hopefully have some common themes and some answers to a lot of those questions. But very much appreciate you guys taking the time to come and learn more, and very thoughtful questions. So please keep them coming. Thank you.
Thank you all.